to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, Cyprian, how are you?
I'm doing great. Today, episode 104. Today is October 27th, and I feel like there's a lot of action, right? Like we talked for weeks and weeks about the slowness of the summer. And now there's a lot coming at us, a lot of information. I feel like there's movements in the market. Let me pull up my screen real quick just to show the headlines, right? This is today's headlines. Fed's favored inflation gauge matches forecasts, cementing interest rate pause next week. So, AJ, what are you seeing? What information are we looking at? Because we've been seeing red across the market for the past, 2 weeks or so.
I mean, if you really want to look at it, take a look at my chart. You know, we've been seeing red across the market since July 7th. Now, I'll be honest, if you go back to previous shows, we actually, these first moves in this descending channel, these first three moves bringing us all the way up to September 1st, those were very weak downtrending type moves. We call the ones that go against the downtrend range contraction moves, and the ones that go for the downtrend or in the same direction of the downtrend range expansion moves. Those moves were very weak, which were more, in flavor with sideways channeling. But then on September 1st, we started to go down. And to be honest here, let me go ahead just to get right into the charts. I'm going to put my drawings, my measurement, my rulers on our charts. You know, as soon as we had the close on September 21, we knew something was up, because not only were we cementing the maturity of that downtrend, all you need to have a mature channel, whether it's up, down, or sideways, is two tests of a level of support and two tests of a level of resistance. So we had those tests, but in addition, now we were starting to get expansion and contraction moves that were more in sync, or what we call ideal downtrending moves. So yeah, we've kind of known by the end of September 22nd, September 21st, that hey, this was something up. And then we got, a real nice contraction move that went from October 3rd to October 11th. And now we're on this expansion move. And I even sent SIP a little message midweek. As soon as we closed into this green zone below 4,194.64, that happened on Wednesday evening. We cemented our third ideal move. Now we've got a total of 1, 2, 3, 4, 5, and we're on our sixth move. So we don't even just have a mature downtrend that has formed, but now the last three moves have been into those ideal downtrending moves. There's no more question about it. We actually, if you take a look over here, I'll quickly log into our web portal, and I'll show you our members area. You've got my little fishy scene that I have Google queue up for me here. But if you go on into our members area, this is what the members see when they're logged into our web portal. You'll see that Trading Trainer, that's my company, we downgraded our trading bias from neutral to neutral bearish on Wednesday evening. So we haven't gone to complete bearish, but a lot of the sectors and a lot of the broad market is hinting at selling off SIP.
Yeah, and I was just looking at the charts, because if you zoom out a little bit, that 41.15 level, there's a lot of consolidation, and so there's there might be some resistance there.
There might be some downward resistance, but we say something here at Trading Trainer. We say that the bulls like to climb up the stairs and the bears like to jump out the window. I find that there's more resistance overhead than we find in floors, because when people get into that momentum of selling off equities, it tends to be just all or nothing, right? When it comes to buying equities, because people in their minds think that they're riskier assets, people put their money in very meticulously, slowly, very contemplatively, all those adverbs. But when the proverbial poop hits the fan, people are not afraid to take all of their money out and put it into what they view as safe investment. So the bear literally jumps out the window. The other thing that we've noticed over the years is that not only does the bear jump out the window, but the floors appear abruptly, not necessarily at some sort of, horizontal level, but when they appear quickly. And so it's difficult to trade bear trends because you never know when they're going to end. And when they do end, they change personality quite quickly. You have to be very nimble to get out of your bear positions.
I also imagine that in those bear times, like geopolitical events have an effect. So let's run through some of the headlines this week,
So
because
many key headlines.
it might have an impact, right? I mean, the
Yeah.
Israeli Hamas conflict is not
That
is not
seems to
getting
be
any
the
better.
biggest. That seems to be the biggest. I mean, it's escalating. I just remember I had a friend, growing up in the Washington, D.C. area. Everybody is somehow affiliated here with the federal government in one way or another. And I had a childhood friend who, his father was like one of the main nuclear physicists advising the government on, nuclear treaties and things like that. And he always used to tell us, when I was hanging out with my friend and we'd be talking to him in the evening, he'd tell us about the Israel always being at the ready with their nukes to take out all of their neighbors if necessary. That is not an animal you want to poke. And Hamas poked it in a real dirty way. I mean, whether you are somebody who thinks that, one way or another, that's really not a way to air your grievances, the way that Hamas did. And now Israel is retaliating, and boy, people in the markets, at first they were thinking this would be quick. We don't need it, it's just a blip on the radar, but it is expanding, it's extending. There might be conflict on more than one front. More than one country might get involved. The US might get involved, and investors are taking note, it looks like. I mean, I think that's the number one headline.
Yeah, that and the ramifications, it being all over the media. Obviously, we don't, we want to see some support come to fruition. I'm looking at the notes, and I think the other big headline that really caught my attention was the GDP number. The GDP really
Oh,
came out
wow.
strong, and I was surprised by that, especially when we should all be assuming that things are slowing down. And I saw a lot of headlines or people's reactions saying, don't believe the data, it's not real. And I saw 4.9, and I was like, that's pretty darn good.
Now, I want to remind everybody that the GDP gets reported for every quarter 3 times a month apart. In fact, it just seems like you and I were reporting the final numbers for quarter 2 GDP just yesterday, but of course it was a month ago. This is the first pass at quarter 3 GDP. And remember, a lot of economists are pointing out a lot of these economic reports. I mean, quarter 3 is in the rearview mirror. So a lot is changed in just the last 3 weeks. But quarter 3 GDP did beat expectations. It's up at 4.9%. But yeah, it's going to get revised 2 more times. So I kind of agree with a lot of the investors out there that are saying maybe we don't want to put too much emphasis on, what this GDP number here has to say. We had some other key reports too, or key news flashes as well. I mean, there was this composite flash on Tuesday, And the way that this economic report works is under 50 means the opposite of growing, so kind of falling output. And so they were expecting the output of both manufacturing and services in this report to actually show a slight amount of contraction. And instead, it came in stronger than expected. So that was an interesting data point. It's in a kind of an expansion or a rising of output of both manufacturing and services. Both of them are, whether it be the expectation or whether it be what actually was reported, are kind of right around that midland. But that was interesting that, we're still seeing growth. And then new home sales. Oh my gosh, new home sales for September blew the numbers off of the expectations. People, I think, and this might be just people who had money saved up. There's tons of deals out there. Builders want to get these inventories off their records now that money is getting more expensive. So there's a lot of deals in that, as well as actually, if you're looking to buy a car, there's a lot of deals in cars right now. But so I think that that's what you're seeing here. This might be just a temporary blip because of the great priced deals. And then today we had the all important personal income and outlays number. And what we're seeing here is, number one, incomes definitely have moderated. You can see that they're way down, way below expectations. Well, not way below, but lower than expectations. Whereas it does show that in September, we continued to spend. But then when you start to look at the actual price index, and again, a lot has happened in the last 3 weeks, and so people are even putting into question these numbers. But when you take a look at the price index, it's actually more moderated. And then you look at the core price index, which doesn't include fuel and or food. I mean, it's right down where expectations are. So it's almost a given. If you take a look at our little notes here of what investors believe is going to happen next week with our Fed meeting, I mean, they're saying pretty much that it's 100% that the Fed's going to do nothing. Even looking at the final Fed meeting of the year, which is in the second week or third week of December, pretty much they're expecting very little to happen. 20% of the folks, which is a little bit higher than what it was a couple of weeks ago. Actually lower. Now that I think about it, it's lower. 1 month ago, it was closer to 40%. It was 36%. They're saying a 1/4 point rate hike, but most people are saying the Fed's not going to do anything for the rest of the year. I think that's true. I mean, just in the last week, we've seen bond yields finally succumb to what the Fed is doing with bond sell-offs. I bring up this chart periodically. If we come over here to our 3-month, we can see the Fed continues to sell off on bonds. And so that's finally affecting yields. And we're seeing fuel prices drop. And next thing you know, food prices might drop. So I think that all these tactics that the Fed has taken, plus, the skirmishes in the other parts of the world, Ukraine, Russia, Israel, Hamas, I think that this is all taking a toll on the markets. That means that the Fed doesn't have to take any more action, at least not in the rest of the year.
Yeah, I think about the psychology of it, right? Because
it's all psychology.
The visuals are so vivid, right? When you see what compared to previous wars, right? It wasn't so readily there and so much information coming at you. And I almost feel as a consumer, oh, maybe I don't want to go make this huge purchase because I'm seeing, there's all this drama I feel bad, and so maybe there's a little bit of psychology where the tightening starts to come into play at a mass scale, right? Even here in America, which would probably be a good thing for inflation and some prices, because we have seen it jump rather significantly over, even the last 3 years, right?
That's true. It's true. Not only that, earnings season. Should we talk about earnings season?
We do have some names coming out. Is there anything specific that comes to mind in terms of
I
some
mean,
earnings?
we've got the big seven, right? They call this they call this the Magnificent Seven. Those are Apple, Microsoft, Alphabet, which is Google, Amazon, Nvidia, Tesla, and Meta.
Yeah, but
Now,
realistically, AJ, all those, like, why should those companies determine what is happening in the country? Because those companies seem to be able to do well off no matter what's going on.
well, you think they do. I have to say that Alphabet reported this week and Meta reported this week, and their numbers were down. They were down below expectations, and that caused some sell off of those symbols. And Microsoft actually did pretty well, but didn't you remember we've been talking about correlation, and when everything sells off. So even though Microsoft did well, by the next day, when Meta reported and said, "Hey, we didn't do well," Microsoft started to sell off as well. So there's sell off in the big companies, and these big companies, I mean, they have huge capacities, they have huge capital, and so they do, determine a big portion of what our GDP is. There's the aerospace and defense companies, of course, they're very huge, and the fuel companies, but these tech companies are conglomerates. I mean, they're huge. Something to keep in mind.
Yeah, and then, I mean, two of those are heavily driven by advertising dollars, and I think
Mhm,
advertisers, in a similar sense, or even this Q4 spending should increase across
mhm.
the board. I'm seeing some trends there. So I mean, that's kind of the holiday season. All right, a lot that's going on in the market, a lot that's moving the market, and we've been talking about opportunities all week. That's the main reason we've got the program Trading Trainer. If you're interested in learning more, if you want to get into the details on some of the strategies being implemented, AJ's got a wonderful daily workshop. I've gone ahead and thrown the link into the chat. And so head on over there, sign up to learn more. We don't have a trending topic for today. So if there's any specific tickers that you want us to run through, we should have some bandwidth today. I know AJ's been looking, we've been having positions on for the past couple of weeks. So we want to run through those to give people some quick updates. We're going to take a little bit of a break here. We'll be back in a few seconds. Sit tight. We'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right.
Sip,
I see the VIX up.
I gotta say, man, the VIX is creeping higher and higher. I agree with you about the uncertainty of investors, and the VIX is a great way to kind of see that uncertainty in actual concrete, like, evidence. People are starting to buy options as hedges. The options market, which was flat for like 3 months during the summer, it's starting to get some activity, and we can see that in the VIX.
Yeah, that was a rough 3 months there. I mean, we were really searching for opportunities, but now they
Mhm.
seem to be coming left and right.
Yep. The other thing is I'm going to throw this out there, and I hope you're not mad, but I might disagree with you regarding the winter holidays actually prevailing this year. We got a report from UPS. UPS shipments are way down. UPS is getting a sell-off. So when UPS reported their earnings, they were like, "We're not shipping as much as we used to," type conversation. And usually I would agree with you that we expect some sort of rally at the end of the year on the retails and the winter holiday season. I almost feel like people are, based on what I'm seeing in the charts, people are tightening their purse strings. It's not going to be as merry of a holiday this winter. People are going to find other ways to celebrate than by spending money at the stores.
It's probably a good thing. I think I was thinking more of comparatively annually, people buy
Mm.
gifts, so they start to spend a little bit more. In advertisers, I know from my experience,
Ah,
spend
yeah.
spend a little bit more to try and close out the year. So all right, so let's go through some of the names that we've been looking at. I think the one I would want to start with is GM, because aren't we starting to get some good news in terms of
Mm.
them coming together and putting a deal to with the auto strike?
Yeah, but it's not showing up in the investors chart. Investors are skeptical. Here's GM's chart right here. I'm going to go ahead and zoom in a little bit. And I'm going to switch over my indicators here from my retracement confirming type. And I've got my other ones configured. Let's go ahead and just switch those. I'm going to stop showing this one study. And I'm going to start showing, by the way, these indicators are available for free. And my users and I are finding all sorts of ways of using these indicators above and beyond what their initial design was, which was to help us with the retracement analysis. They're using it to identify actual primary signals on doing some trading. You can see here on GM that number one, GM is dipping below the threshold that we have at $28.40. This is a threshold we set up, which tells us that perhaps we're at that point where GM is not going to come back and retrace all the way to the top of the channel that we thought it would be. So it makes it a little bit more difficult to plan on trading this as a premium trade. Right now this is pretty much a downtrending trade, and again, investors have not bought into the fact that there is any sort of deal on the horizon. They know that the UAW, especially the UAW negotiating group, is quite aggressive. Not necessarily a bad thing for workers, but they've come to a deal with some of the other manufacturers like Ford, and pulled back at the last minute saying it wasn't enough. And then they go on the attack with some ads or some news headlines being released, press releases being released that are quite aggressive. So I don't think investors have bought into this. This is another one where investors thought it would come and go quickly, and it lingered on. So you can see in the charts, investors haven't bought into it. In fact, if anything, they're kind of letting go of their positions on GM. As far as we're concerned, I'm a big fan of General Motors. I think that General Motors has quite a place where they can, compete with the new EV car manufacturers. There's been a lot of rhetoric recently that the push to EVs is premature, so that's kind of affecting things. Um, just overall, I'm not as excited about owning. Last week, we talked about selling off our positions in GM and waiting for a better opportunity to buy even lower. I'm still not ready to start buying GM at this point. I think it's a wait and see and let this thing mature back in, let it tell us once it's hit a floor, and once we get clear signals and that there's some consistency in the new pattern, would we come back to GM? But right now, it's just something that we want to check in with maybe once a week.
Definitely. Another one of those names that is in the checkup category would be Zoom Video, ticker symbol ZM. We've chatted about this one a couple weeks now as well.
Yeah. Zoom is another one. I was all excited about Zoom finding a bottom a couple weeks ago, and we were waiting last week as well for that bottom to materialize. Every time we get a signal that there's a bottom, it doesn't confirm on the day that we would actually trade. And if anything, either the next day or maybe a couple days later, we lose the signal to buy Zoom. And so that happened just again in the beginning of this week. And now we're below that 40%. And when I say 40%, what I'm talking about for you kind of technicians out there is if you take your channel where you identify support and resistance, and then you figure out that distance in dollars, right? 40% of that distance, both added to resistance and subtracted from support, that creates these thresholds that statistically, if you've looked over charts before that are in a sideways channeling pattern, if they come out about 40% of their channel width, statistically, they're not going to return. In other words, they've basically broken out of that channel and they're looking to form a new personality. They might start channeling sideways at a new level. You don't want to start believing in that sideways channel at the new level till you've got 2 tests of support, till you've got 2 tests of resistance. Again, we call that a mature sideways channel. You don't want to start, basing your strategies on those type of channels until they mature. So yeah, Zoom has gone below that 40% zone. We put it, we take it off of our active hot list. We move it back to what we call our watch list, and we check in with it about once a week and see if it has matured into something and worth planning out a trade and bringing it back to our watch list.
All right.
Hot list.
Zoom
So many terms.
video communications, if we want to be technical about it. All right. A third name from last week, and this is Roblox, ticker symbol RBLX.
Now, this is so, especially with what happened on Wednesday. Wednesday, as I mentioned earlier, we changed our trading bias here at Trading Trainer from neutral down to neutral bearish. That means we want to start having a bearish sentiment. There's a bearish tide. And unless you have symbols that are in a sector and the sector is bucking the trend, which there are a couple sectors that are bucking the trend. They're typically like defensive sectors, not defense like aerospace and defense, but where you would put your money when you're afraid that other securities are selling off. But for the most part, the market has this push down, right? So when it comes to symbols like Roblox, this is a great candidate where we want to get in at the top of channels. So this is uncomfortable for a lot of investors because this is, taking the premise of shorting your symbol, right? A lot of people feel more comfortable buying, letting things appreciate in value, and then selling. Buy low, sell high. When you start to present to them strategies where I want you to sell first at the high price, let it drop in price, and then buy it back at the low price, that's called shorting. People kind of, have allergic reactions to that because it's just against their view of the norm. But that's really where we want to be right now in this downtrending market. So Roblox, I still absolutely love it. In fact, on Wednesday evening, we got yet another signal. We had gotten a few signals in the past that we had found a top, but then those signals never really panned out when we went to trade it and soon reversed. But on Wednesday evening, we got our signal, and I'm going to show you an intraday chart just really quick. On Thursday. So if I show you Thursday, right, Wednesday evening, we had our signal materialize after the market closed. And here we're end of day traders. We don't actually, like to spend much time trading during the markets. We rather take our signals end of day, plan everything out, and then come in like a surgeon on the day of trading. So what we wanted to have happen on Thursday was we wanted to have when we come in, and we typically like to trade in the afternoon after all the economic news has been released and the amateurs have come and gone. So we come in the afternoon, and we want to make sure we're trading below the previous day close and below the current day's open range. That's the first high and low of the first 30 minutes of trading. And you can see that didn't materialize either. So, with Roblox, if we come back to our 3-month, this signal still hasn't panned out for us. It's not panning out today either. All to say, any sort of trading really relies on its signals, and you don't want to trade until you see the signal materialize across the board. Some people get emotional and they're like, it's close, I'm going to pull the trigger. don't pull the trigger until you see the whites of their eyes, right? Wait for the actual signal. If you can automate it so that you pull your emotions out of it, do that so that you don't get into trades prematurely. I've seen so many people fumble because they get so excited and they just can't wait for the signal and they shoot their gun prematurely. They do the trade and then it doesn't materialize. So we're still waiting for our signal on Roblox.
You'd rather be safe than sorry. And if you've been doing this as long as you have, you don't want to shoot your shot too early. You want to wait for the perfect shot. That's how you end up staying in the game as long as you do. Love that advice. Okay. With that, let's tell the people what you're looking at this week and what position we might be able to take in a very big household name that's been around the block, and that's Intel, ticker symbol INTC, with your pick of the week, AJ.
Well, first of all, Intel reported their earnings, right? And so if you take a look over here, Intel reported yesterday, and the earnings were actually pretty good. And so investors are reacting very well today. So the scoop is we did do a earnings play on this. You can see that investors initially, and again, I always point at the investors in the first hour or so of the day called the amateurs. They always have exuberant emotions based on what happened, the previous night. And so amateurs, as you can see, drew the price up very high in the morning. In fact, again, I can't help but show you an intraday chart. Let me go ahead and show you what's going on here. Amateurs blew the price up, and now sane minds, right, are taking advantage of some of those price increases, and they're selling at that high price. I don't expect Intel to stay as high as it was this morning. I expect to continue to see some sell-off. My implied volatility trades did very well. And so we'll be looking to exit those positions in the next, either today or maybe at the beginning of the week. But with that said, now we're in a new place. Intel has been in a pretty reliable, I wouldn't say the ultimate in reliable, but given what the market's doing right now, Intel's in a nice sideways position. I'm considering, and I'd like you guys to think about it as well. And if you doubt me, do some paper trading. Let's see for ourselves. Let's not put money on the line. Let's go ahead and trade in a simulator. When Intel gives me a top signal, I want to short some of that Intel. Or if I don't want to short, deal with the shorts, I can also buy some back month, deep in the money, far out in time put options. Those things are option substitutes for the stock, meaning that I can either short the stock or I can buy these put options that'll profit exactly opposite the stock. I want to do that only when I get the signal. That's kind of the theme of the day. Wait till you get the signal and then see how far it drops. And if it drops, maybe I would say anywhere above the $30 range, and then it starts to go back up again, I'll go ahead and sell some near-term at-the-money puts, use that money I make to go ahead and offset some 3 to 6 month out protective calls, probably with the strike price around $37-38, and go from there, right? Create a premium trade on it. If indeed Intel decides to drop lower than $30, I'm not going to worry about any of those extra trade position adjustments. I'm just going to look for a bottom and then sell Intel and make the money on either the shorted stock or the back month puts. So there's a lot getting ready on Intel. We'll go ahead and put it on our list to follow up in the upcoming weeks. But in the meantime, I would tell everybody to just watch Intel. And if you want to practice some of my strategies, put it into your paper trading log. Get ready to trade it.
So you're saying that you're looking for that red arrow to point down in a short type of position. And so why are you waiting for the next signal rather than looking at the blue pop that you have there now? Are you just not as confident?
So this blue signal is not being generated from normal buying and selling action. This blue signal is a result of the investors excited about earnings. So it's kind of like a false signal. And that's one of the things we talk about often. We talk about how you can't just trade the chart. You have to understand what's happening with the symbol underneath, whether it be a stock in this case or an ETF or an index. In the case of stocks, you have to know about when their earnings are. We have to know about how the company's doing, stuff like that. We call it a soft data analysis here at Trading Trainer. And so we know that this arrow, this signal here to do some buying is kind of a false signal based on the buying that's happening on good earnings. We want to let that pass because it probably will pass, and we'll wait for the selling signal and take it from there.
Yeah, and then I look back on your chart and it's got a similar setup at the last earnings where it kind of popped and it fell off. So
That's right.
it definitely validates. So that's I think that's really good advice with the head fakes.
Mhm.
Which is probably why it's important to keep those earnings information on your charts, because you will see those fluctuations that may be a little bit out of the standard deviation of their moves and whatnot. So Intel, AJ's pick of the week. We'll keep an eye on it. We'll check on it throughout the rest of the year, see if we can find that
Mhm.
top. And like AJ said, feel free to practice it in your simulated accounts and follow along if you're new to this type of trading. All right, let's dig into our speed round. I feel like a few of these names we might be able to find some similar opportunities. So we'll head out west to start with our first name. This is Kathy in Seattle, Washington, interested in C3.ai, ticker symbol AU. I'm assuming it's some sort of we've covered this before. It's
Yep.
an AI company.
In fact, I got the ticker wrong in our notes. For you, those of you out there, it's actually ticker AI. I was typing fast this morning.
AI.
It's
AI.
ticker AI. So C3.ai, they are applying artificial intelligence solutions on the enterprise level. So, for instance, they're going out to big companies who might find a way to use AI to help with their customer support or help in whatever their product or services that they deliver. C3 AI has a whole suite of AI tools that are made business to business. Um, uh, they're kind of a bellwether for the whole AI movement, right? Because they are focused completely on AI. Whereas when you look at like a Microsoft or an Alphabet, they've got a huge AI investment into the future, but their business is, more about, what's happening in the present. So they've got mixed in their ad sales and whatever else you attribute mentally towards like a Google, a Meta, or a Microsoft. So this company is a pure AI play. And what you can see here is what we call consolidation. So Kathy, this thing is consolidating. It means that it's getting into a very tight trading range, a converging channel, if you will, off of after coming off of some highs here. And so this is a little different than the sideways choppy channel where you'd want to sell premium, because the idea behind selling premium, or that option strategy where we're legging into the different sides of selling premium, is that you hope that this thing continues to go sideways for a while. As long as it goes sideways, you can maintain and keep that position going in order to pull as much monthly incomes or cyclical incomes out of the position. In this particular case, this thing's consolidating, which is if you can imagine the avatar, somebody an investor of C3 AI behind their computer screen. The reason why it's consolidating is because they're unsure of what's going to happen next. There's a lot of uncertainty. There's a lot of confusion. They're logging in every day, wondering if they can get a hint as to whether to buy more or whether it's time to sell. And so there's kind of a stunned behavior. It looks like C3 AI has earnings not now, but probably in a month or so. And that might be telling for those investors. It might be a that little bit of news that they need to decide. But the main point is that those investors, whenever they get fed any sort of tidbit, either positive or negative, they're going to start buying or selling. Consolidations usually are the lead up to a breakout up or a breakout down. Breakouts, ups and downs are the opposite of what us premium traders look for, because that usually breaks out of our trade. And so long as we've got our trade zone in place, meaning we've sold premium and we've bought protection, that's fine. Breakouts are automatically adjusted for. But if we're just in our initial position and a symbol breaks out, especially if it breaks out against us, that's not a cool scene for us, right? That could be some pretty massive losses above and beyond what's expected. So if you're familiar with breakout strategies, I would say this is a perfect candidate to be following with breakout strategies. But as far as selling premium, I'm not sure that's what we want to do here. Also, as earnings get closer, over the next 4 weeks, you might want to consider some sort of earnings play on it. But this is not one for us to do with premium selling.
Yeah, I just imagine that naturally, if they get a product and they get a boost in sales, the long term potential for a company like this looks good, especially with the way that AI is trending. So, I'll definitely be keeping an eye on it. It's also got a really attractive ticker symbol, AI. I mean, I just naturally probably get some eyeballs in there. So, that's Kathy, thank you from Washington out here on the West Coast, AI. Moving on to our next ticker, or our next name. This is Lake Lewis. I don't know if Ted from Lake Lewis, Alberta, Canada, interested in Behemoth AT&T, ticker symbol T. AJ, does this stock even move? Like, I imagine there's so many shares. Like, this is one of the the first stock, it's been around for a long time.
Yeah, AT&T has been around for a long time. By the way, Ted, Lake Louise, you're very lucky, man. That's in the Canadian Rockies. I've been there a couple of times. My friend tried to take me skiing there, and I think I did it one day, but I'm not a snow guy. So I found actually sitting on the couch in the lodge under a blanket, where through one window you could watch other people coming down the hill. And then in front of you is a big giant fire, and then to the left of you is like TV, and usually you've got like ski bunnies on either side of you. That's my idea of a cool vacation. So I give you kudos. There's some good pictures through the windows at Lake Louise. Yeah. Okay. So yeah, AT&T is a huge symbol. They reported their earnings. That's about a week or so in our rear view mirror. Investors, brought things up about $1, but it's no big deal. I think this is a good premium trade. And today we're actually getting a signal. And for those of you that are curious what signal I'm using a fast MACD calculation. So that's the 619 for the main calculation, and then the 3, these are exponential moving averages. But I'm not using the closing price. I'm actually using VWAP. I've been playing around recently. If you guys want to kind of get into my experimental area, I've also been playing around with high-low close divided by 3, which takes into consideration some of the true range calculations, historical volatility. So you take a look at those and you apply them in, and with our new indicator, we get, the ability to play around with all these different types of ways of looking at signals, confirming signals. We didn't see much change, but today it looks like developing that we might get a signal end of day that this would be a good time to consider shorting AT&T, which is the side of the equations we want to be on right now. Either short the symbol, and it's cheap enough that you can do that if you have a margin account, And AT&T, like you said, Sip, it's been around since Hammer was a hatchet. You could also find, AT&T is traded every dollar. You could find a substitute put option. Remember, when you're looking at put options to go deeper in the money, you go higher in strike prices. Some people get confused. Again, the natural tendency for people is to, be more comfortable with going long stocks and using calls versus puts. And we're talking about flipping the equation, but that's what you have to do right now with the market going down. But go deep enough in the money, far enough out in time. There is, I might consider using this $19 strike price put option expiring all the way out in April, or even going out. I think I might even go as far out as June. And so in that case, I probably am thinking about this $20 strike price. There's plenty of liquidity. You could totally do it, get a discount, right? I could buy this put option for about $5.10 versus shorting the stock at $15. I mean, that's like a 3x leverage. So I could see doing that again. Wait for the signal to materialize. That's the theme of the day. But I could see doing that transaction, preparing ourselves to get into a premium trade on AT&T. Every time it bottoms out, sell some premium, buy some protective calls, rinse and repeat, make that into your income stream. I like it.
Question for you, AJ, in that I'm seeing somewhat of a trend where we're getting good earnings and we're seeing a pop, but are you predicting that the overall trend is going to kind of bring like in terminology, it's like filling the gap? Is that kind of the play?
Yeah, I think we've got some falling windows here for those candlestick folks out there. Yeah, I think that you'll see a lot of pops on individual symbols that did well, but it's probably not going to be lasting because the overall correlation is that the market's not doing well. Now, again, I'm going to preface this. When the bottom of this market is found, we want to be prepared and be nimble enough to get out of these short positions. But in the meantime, it really looks like I'm betting against the markets on a lot of my positions. And any of these positions that are at the top of their game right now, that's a perfect opportunity to get in when the price is high and get out when the price is lower.
All right. So with that, let's move on to our third and final name of the speed round. This is Karina from Philadelphia, Pennsylvania. Interested in one of the airline names, JetBlue, ticker symbol JBLU. I imagine they should be improving from cheaper oil, right? Or doesn't look like it.
No, and I see why we're interested in JetBlue. If you take JetBlue, you can see has maybe found a footing, found some support. If you take a look at some of the other players like United Airlines, they're on a sell-off. If you take a look at American Airlines, it's almost a mirror of United Airlines, still selling off. If you take a look at Delta Airlines, selling off. So JetBlue looks like one of the candidates in this sector that has found a bottom. But you know what? Remember we were talking about C3 AI and how it was consolidating? That's what we're seeing here. Investors who are interested in JetBlue, and we've got an earnings coming up, so we'll talk about that in a second. But investors who are seeing this, who are in JetBlue, they're probably wrestling with the idea that, hey, I like what JetBlue's doing. I'm not ready to start selling off like the people who own the other airline stocks are doing. They're, counting they're deciding that it's time to not be part of those airlines. Or I'm sure that there's a lot of big money investors out there who are actually betting against those airlines. I think that the JetBlue investor is a little bit more resilient because they think that their airline that they're investing in has a leg up against those others. We'll find out during earnings. But again, this is not a good place for us to create premium trades from because despite them thinking that their stock is something special and so they're not ready to continue selling, there's still that whisper in the back of their ear that says the airline sector is selling off. So they're just waiting for either good or bad news. And then this is going to, probably break in one direction or the other. So that brings us, Sip, to the earnings. If you take a look over here, if we pull up this chart here, it says earnings are going to be before market open on October 31st, so Tuesday morning. We could, take a look at an earnings play here. When we look at earnings plays, kind of what we're thinking about is if you use a near-term option, and I'm going to just kind of do this really quick. We've done this before on previous shows. And when I'm talking near term, I'm talking about like a weekly option, like 1 to 2 weeks out, like 10 days out. So if we're talking about next week, right, the October 27 option is expiring today. The November 3 option is expiring next Friday. I'd probably be focusing on this November 10 option. And you might notice I have a column here that says implied volatility. And you see that this number is very high. That correlates with its price. So if this is high, that means its price is up as well. And what usually happens is the moment that earnings is released, this number drops significantly, which means this price drops significantly. And so we like to take advantage of that. If we know that price is going to drop on something, we want to sell it when it's at its high price. And then as soon as the price drops, we want to buy it back out. So it's sell to open, buy to close. And the way to do that with an option is you have to have something in the background that can cover the commitment that comes with selling an option. So what we do is we typically buy an option that isn't going to see this effect. So if we want to see this effect, we usually use an option that's like 10 days to expiration. If we used an option that was more like, I don't know, 5-6 months to expiration, like this March option, same strike price, you'll probably see that its implied volatility changes very little because people are using those 10-day out options for hedging more than they're using the 6-month out options. They're using the 6-month out options for different purposes. So you can actually buy this option, have it not change in price very much, sell the front month option, the one that's 10 days to expiration, have it change in price, buy it back at bargain basement prices, and then sell this one. And you create this cool trade. Again, you'd never be able to do this with anything else besides options, but it's a really fun strategy to use to take advantage of an earnings play.
And how long would you wait till after to basically close it out?
I mean, the scoop is these are typically, fully cashed in as soon as earnings are released. So a lot of people put them on a day or two before the earnings announcements and then take them off the day after. One caveat with this particular strategy, this is called a horizontal or a calendar spread, is you want to do a little research. And the idea behind this one is that the underlying symbol doesn't move very much in price. Or if you do have a bias, make that strike price that you're using in the direction of your bias. If there's much price off of, the strike price that you select, it could work against you. So that's one caveat is you got to, this is not just something you do based on the chart. You want to know some understanding about JetBlue and have a bias on the earnings.
From like a branding perspective, I almost never hear anything negative about JetBlue, like compared to some of the other airlines. So when I see the stock price, I'm like very surprised that they are such a cheap ticker. Considering that it doesn't seem like they're a bad brand. Maybe they just don't have as many flights and whatnot. So thank you, Corinne, for JetBlue. We've been looking at the airlines for quite some time. We'll keep looking to see if there's a bounce back, because I think we all want the airlines to succeed. We all like flying places. We all like
I mean, they have to succeed, don't they?
we want to root for them. So let's see if we can find a bottom and get back up there.
You mentioned fuel. I mean, fuel is interesting, isn't it? This week we saw Chevron announce that they're going to acquire their smaller competitor Hess. So we're seeing consolidation in the fuel market. That's an interesting. I wonder what that means. I haven't quite delved into it, but there must be something that we should take from that. So we'll be looking on that and talking about that in the long term.
Oh, more monopolies, more bigger companies. That's the future, I guess, right?
Maybe. I mean, we see these periods of expansion and contraction. I think right now we'll probably see a lot of mergers and acquisition, but specifically mergers in the fuel. With all the push towards solar and EV, I wonder if that's all telling, right? Kind of the end of an industry in the next 15 to 20 years, depending.
Probably good for humanity not to be, bleeding our planet dry every day. All right. I'm sure that throughout the broadcast, you guys have seen AJ's awesome new indicator. We've got it available for you in the web portal. So if you want to head on over to that link, I did just throw it into the chat, tt4.me/indicators. You can get in there, get access to the indicator, get access to a whole slew of other trading tools, tutorials, videos. And as always, if you want to reach out to somebody on the support staff, if you got some questions, feel free to leave a comment, send a DM, send an email, go on the website, hit up the chat. Someone's definitely going to be there to help answer any questions that you have. With that, AJ, we're getting close to time here for today's episode. Should we expect anything heading into a holiday, Halloween, midweek, end of month schedule? Should we continue to look for this downtrend? The rest, heading into the beginning of next week, heading into November.
I mean, yeah, I'm unless I get any sort of details otherwise, which we'll talk about for sure on these Friday shows. You want to start thinking about being on the correct side of the equation. So if there's going to be a sell-off, you want to be a seller, right? You want to be somebody who is not necessarily buying, not yet, right? You want to make sure that a bottom is found. I was talking to one of our program participants yesterday, and he's so programmed to buy low, sell high. He's manufacturing lows and saying, I'm going to buy because this looks like it's the lowest low. We're not getting any signal that the bottom has been found yet. If anything, we want to figure out how to sell into this downtrend. So keep your eyes out for, whenever a symbol that's trending down has a temporary pop up, because that temporary pop up followed by some sort of indication that now it's going to resume its downtrend is the perfect time to either short the symbol or buy some puts, right?
Yeah, and options are a perfect tool to take advantage of, current markets like we have now. So if that's something that you've been sitting on the sidelines with, now's the time to take advantage. So feel free to check out the webinar. AJ will break down his strategies. Head on over and grab his indicator. If you've enjoyed the broadcast, feel free to hit that like, hit that follow, hit that subscribe button. We enjoy all of our new members, and we try and answer as many questions as we can. AJ, thank you for your time. Everybody, thank you guys for tuning in. Have a wonderful Halloween. If you got any cute photos with the kids, feel free to send them over. Maybe we could drop them in.
It's my daughter's second birthday. People might remember that she was born on Halloween, so she's turning 2.
Oh, wow. Halloween and a birthday party and a toddler and two terrible twos all in one. Goodness.
Yeah, she came running into my office the other day dressed as a kitty cat, and she was all excited about her kitty cat costume that mommy bought her. So it'll be a fun night.
And are you gonna have a costume?
No.
I'm gonna be dressed as a dog, Cooper the dog.
Cooper is your favorite. That's awesome.
All right, everybody. Thank you, AJ. We'll see you guys next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.